YouTube is filled with videos claiming the housing market will crash any day. As an investor, I actually want a big correction in 2024, but it's not going to happen, and I'll explain why. Prices have reached obnoxious levels. Home prices are up 40% from pre-pandemic levels, which is the largest price gain over a 3-year period ever. We're also facing a lopsided economy, high mortgage rates, high inflation, and stagnant wage growth. Given this, it's no surprise that housing affordability has reached its lowest point essentially ever. So if nobody can afford a house, wage growth is stagnant, most people have a negative sentiment about the current economy, and credit card debt is at an all-time high, I know what you're thinking. Why the hell haven't prices gone down? I'm here to tell you, while all these things are true, there's little chance we'll see a crash in 2024. It pains me to say this because I really want a correction. Now, it is possible for prices to go down modestly like 5%, but don't expect a crash like other YouTubers are predicting, and here's why. Number one reason why prices are not going to crash is low inventory. Inventory is at lows that we have not seen in a generation. The main cause of this is that nearly 80% of homeowners have a rate of 5% or less, and almost a third have a rate of 3% or less. That means homeowners today have manageable payments and staying power. A big part of the usual market cycle are people who sell their existing home and downsize or upsize. When you're sitting on a 3% mortgage rate and you have to swap to an 8% rate, there's little incentive to move. So we're not seeing these regular sellers. Let me give you an example. Let's say you have a $350K loan at 3% on a 30-year fix. The monthly payment is $1,475.69. If you sell your house and buy a new one with the same size loan at 7.5%, your monthly payment goes to $2,447.25. That's $971 more expensive per month. No thank you, I'll stay just where I'm at. Despite all the hundreds of videos on YouTube claiming a crash is right around the corner, it just won't happen when there's historically low inventory like this. If that part of the picture changes, we can talk, but it's not happening yet. Number 2, demographics. There are roughly 88 million millennials who are 22 to 41 years old, and most of them are in their prime home buying years. All that talk about millennials wanting to rent for the rest of their lives was BS. They want to buy, and it's creating a lot of demand. Millennials have been the biggest percentage of buyers since 2014, and this trend will continue. Incidentally, boomers took the top spot for home buyers in 2022 for the first time since 2014. Millennials were number 2. When you have a growing family, your housing needs are strongest, and sometimes you just don't care what prices are. You need and want a house for your family. I've been in that situation, so I get it. Number 3, institutional demand has been very strong over the past years. Institutional investors are large companies looking to make an investment that ultimately turns a profit. They can invest millions or billions at a time. Because of their sheer size and deep pockets, institutional investors can have a massive impact on home inventory, both on a local and national scale. This is particularly true in growth areas where companies can swoop in and get what practically amounts to a bulk deal on inexpensive houses. To make matters worse, many investment companies make cash offers and take them as is. From 2020 to 2022, we had record levels of institutional investors swoop in and buy homes. In 2021 alone, 13.2% of properties were sold to institutional investors. While investors have slowed down significantly in 2023, they have not stepped in to sell their current glut of inventory. For example, BlackRock, who owns roughly $70 billion worth of real estate through their REIT ETF, has limited selling, which has prevented a big spike in inventory. Number 4, multi-generational wealth transfer. The boomer generation has had the greatest wealth accumulation in history, with about $70 trillion of wealth that's set to get transferred. Some of this money is getting transferred now, and much of it will get inherited. A recent Redfin survey found that nearly 40% of recent homebuyers under the age of 30 used either a cash gift or an inheritance to afford their home purchase. The bank of mom and dad is a real thing in today's housing market. The greatest beneficiary of this wealth transfer will be the millennial generation. Given all this wealth that is set to be transferred, and given that millennials are the largest population segment in the US who happen to be in their prime home buying years, housing still has a lot of momentum for the years and decades ahead, since America's favorite asset is real estate. Number 5, equity. Homeowners are sitting on close to $30 trillion of equity thanks to the astronomical rise in home prices over the last 3 years. The average homeowner has about $275,000 in equity in their home. Given this, you're not going to see a lot of pressure to fire sale homes. People on average have staying power. Okay, so overall, I fully agree. Housing looks unbelievably unaffordable these days. I don't blame anybody for sitting on the sidelines, hoping, praying for a crash. It just feels unsustainable and out of whack. I get it. Unfortunately, the bad news is you shouldn't bet on a major crash like so many YouTubers are predicting with their pictures of the housing market on fire. Inventory is at levels that we have not seen in a generation. That's especially bad when you take into account that the US population has been steadily increasing over the past 50 years. Millennials represent the biggest population segment in the US, and then they're in their prime home buying years. You've also got $70 trillion of wealth that will get transferred by the boomers over the next years and decades. Plus, you got more home buying from institutional investors these days, with the exception of this year. Lastly, homeowners are sitting on more equity than ever. Put all this together and housing is on strong footing for the next year. To be clear, I'm not saying there can't be a modest housing decline of 5% over the next year, but rather don't expect a crash. Going into 2025 after the election, that's a different story that we can discuss later. Also, keep in mind, real estate is always local, and some markets right now are still doing really well, like South Florida, and some markets are doing really bad, like Boise and Reno and Phoenix. But on average, real estate is on decent footing right now. Unfortunately, I'm not a beneficiary of a big cash inheritance or a cash gift. It really doesn't feel fair for so many first-time home buyers who don't have the bank of mom and dad for support. All I can say is hang in there. Cycles come and go. I hope you enjoyed my video. If you did, push the like button, and I wish you a great day. Thanks.